In the banking space and the steepening yield curve, Ken, is that on expectations that the Fed doesn't cut as much as maybe the markets are pricing, or is it a debasement trade story? Is it a reallocation out of U.S. assets? What for you is driving yields higher at the long end?
Yeah, I think inflation expectations, and you kind of get to a point where you're looking at the spreads, you're seeing this, and inflation is not really going away. And I think at the end of the day, you're going to start seeing rates continue. Look, we had 6 rate cuts, and the yield really hasn't moved much of anything. We're still kind of pegged at 4.10. I think be careful what we wish for, though, Tom. I don't want a whole bunch of rate cuts because that's accompanied with lower economic activity. We should be more on the side of not bad news is good news, but good news for the economy is good news for the market. So I'm one that hopefully we don't have a lot of rate cuts, because that also means there's some other problems underneath the hood that we're not thinking about.
Is the labour market a problem under the hood? How confident are you that the U.S. labour market holds up?
That's a biggie, and this is what we're trying to figure out. There's definitely a cross current because of AI taking out. Again, companies like J.P. Morgan are going to embrace technology. Unfortunately, they're going to cut a number of people, I'm sure, but they're going to become more efficient. And we've seen big cuts from U.S. companies, 10,000, 20,000. I think that's going to continue to some point. It hits some type of equilibrium. I don't think we're there yet. So I think we're going to have to deal with some of these layoffs and some of the disruption that AI is causing in the labor market.